Welcome to Magic Indicator Strategies. Are you tired of losing money in the stock, forex, futures, and any market? Look no further. Now I will give an incredible strategy with two really amazing indicators. I'm sure this strategy will revolutionize your way to be a successful trader. Don't miss out on the chance to increase your wealth in the trading. Click play now to learn this amazing strategy that will make you reach the success if you are consistent and patient. At Magic Indicator Strategies, we are dedicated to providing you with the highest quality content possible. Our goal is to make complex financial information accessible and easy to understand. That's why we've put our heart and soul into our YouTube channel. So, if you want to stay ahead of the game, give this video a like and don't forget to subscribe to our channel for more actionable insights and expert strategies. Without wasting any more time, I am going to explain this strategy to you. First, we are going to add the main indicator of this strategy, which gives us excellent information about what is happening in the market. The indicator is called TMA Overlay, created by RTFXC. We add it to the chart and we are going to change its inputs. We are going to disable the big ASS candles and trade session. Perfect, now the indicator is ready. The first thing this indicator shows us are four simple moving averages of 21, 50, 100, and 200. And then it is showing us triangle-shaped signals to enter the market when there are three consecutive bullish or bearish candlesticks. Our objective in this strategy will be to follow the trend and not against it. So following this logic, we will only enter trades when the signals are in favor of the trend. Now we are going to add our second indicator that is going to filter some entries for us to make the strategy more precise. This indicator is called Neglected Volume by DGT, created by DGTRD. We see that this indicator does not look very clear, so we are going to modify its style. Let's disable everything except Relative Volume Histogram. Perfect. Now we are going to explain how the strategy works. First, we are going to understand how a trend develops, and with our TMA Overlay indicator we can see it very clearly. First, we see that the price makes a strong upward movement. When that happens, we see that the 21 SMA is above the 50 SMA, which at the same time is above the 100 SMA, and finally all the SMAs are above the 200 SMA. And it is clearly seen that all the moving averages are in an upward direction. Second, when the trend is ending, we see that the price contracts and no longer has the same strength. Here we can expect two scenarios, either that the price rests to rise again or that it stops and starts a downtrend, but in 95% of the cases the price reverses. This is clearly seen when the 21 SMA crosses below the 50 SMA, then that is when we cancel any bullish signal that our indicators give us because the force of the trend has already been lost. So we just wait for the price reverses to show us the downtrend to enter short trades. So how does the volume indicator help us to take trades? Basically, when everything mentioned above is fulfilled, the signal candle given by the triangle label should have enough volume. We set our stop loss at the nearest swing low and our take profit with a risk-reward ratio of 1 to 2. We see that it was a winning trade. Let's see other examples. Here we have two signals to take a long trade. We see that the SMAs are indicating a clear bullish trend, so we will take trades when the indicator shows us the green label to enter the market. Here we see how we have these signals that meet all the conditions, so we are going to set the stop loss at the closest swing low, and our take profit with a risk-reward ratio of 2 to 1. We can see that our trades were winners. We are going to see some bearish examples, so that you can understand the strategy much better and you start to earn money. Now we will see examples of short trades. It is basically the same as long trades, we just reverse the rules. So what we do first is see that the SMAs indicate a clear downtrend. So for this first, what we do is see that the 21 SMA, 50 SMA, 100 SMA are respectively one below the other, and at the same time that all the SMAs are below the 200 SMA. We are only going to trade in favor of the downtrend and on signals that have enough volume. In this example, we have 5 signals from our main indicator, but only 2 signals are valid. Do you remember the reason? It's because of the volume. I'm glad you're already understanding better. So we are going to set the stop loss on these signals, and the take profit with a risk-reward ratio of 2 to 1. Alright, we just had 2 consecutive winning trades perfectly. Now we'll look at other examples in another market. I'm glad you're here. That means you really want to be a professional trader. If you like this content, don't forget to subscribe and like this video. We are now in a clearly downtrend, where all the SMAs are indicating that to us. As we have seen, we have to take trades only that have enough volume. So we are going to establish the stop loss of the first trade, and the take profit, and without a doubt it was a winning trade. We are going to the second trade, and we are going to set the second stop loss and take profit with risk-reward ratio of 2 to 1, and it was also a winner because we are in favor of the trend. And we see one last valid signal coming our way before the trend ends, and we take it. We set the stop loss and the take profit with a risk-reward ratio of 2 to 1. And we see it was also a winning trade. As you can see, this strategy is excellent. We have obtained 3 consecutive winning trades. Now let's look at 2 more examples. I am showing you the necessary examples so that you understand this strategy very well. We are now in an uptrend, where all the SMAs are telling us that. In total, we have 6 signals to enter long trades. But only 2 signals are valid. Due to the volume, this is essential because the volume will help us avoid areas where the price is in the lateralization zone, and as we know, when the market is side, we always lose money. That is why, thanks to the volume, we can avoid all that losing streak and make money at the same time. Okay, once we have detected the first valid trade, we are going to set the stop loss at the closest swing low, and the take profit at risk-reward ratio 2 to 1. It is very important to clarify that the risk-reward ratio is greater than 1. It is because we are in a trend, and in this way we have a greater chance of catching the continuation of the trend, as we have already seen in previous examples and also in this trade. It was a winning trade and very fast. Now we go to the second valid trade, and we are going to set the second stop loss at the closest swing low, and our take profit with risk-reward ratio of 2 to 1. We see that it was also a winning trade, because we are in favor of the trend, and with enough volume. Thank you for watching. We hope that this video has provided you with valuable insights into the world of trading. With the most accurate strategy, you can start making smarter and more profitable trades. Don't forget to like and subscribe to our channel for more expert strategies and cutting-edge information. The market is constantly evolving, and we want to help you stay ahead of the game.